Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time, and this week's topic, guys, is candlesticks in context. You guys are not understanding candlesticks the way they need to be understood. Multiple time frames, bottoming tails, topping tails, support, resistance, they all start with a single candlesticks. All right? Multiple candlesticks form pivots. Pivots form trends, trends form patterns, and patterns are how we make our money. So we're going to talk about that today, right? How you can get multiple concepts to converge in an area using candlesticks, pivots, looking inside the bar, getting very, very granular to make you a much, much better trader. All right, guys, if you like these videos, man, I mean it, click that like button. All right. If you want to subscribe to the channel, then subscribe to the channel. I mean, we've been kind of flatlining. And so honestly, I'm getting to the point where it's like, yeah, I don't know if I have the motivation to want to keep doing this if people aren't watching it. So watch the videos. Tell your friends about the videos, right? Because there's a lot of great stuff here. I know people have the attention span of a gnat these days, but I think if you could just last a little bit longer and watch 5-10 minutes of it, I think you'd learn a lot from it. All right. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is understanding candlesticks in context. As I was saying a second ago, nothing happens by itself in a vacuum. It's just not the way trading is, okay? And if you start trading in a vacuum, you're going to get yourself in trouble quickly. You might get away with it once in a while, but for the most part, it's troublesome. And you guys see this frequently. You might take like a 2-minute buy setup and the 60s up like 9 bars in a row, and you're like, well, why did that fail, etc., and so forth. So those are things that you want to definitely keep an eye on. It's not just multiple time frames, but it's understanding the candlestick within the time frame you're looking at, as well as how it coincides or correlates to the higher and lower time frames. So we'll just have to wait and see some of these slides so that you guys can get a better understanding of exactly what it is I'm talking about. But before I get into that, let's talk a little bit about when will the insanity stop. I have a segment for you. This is a little bit newer. I think I got it like a week or two ago, something like that. It's not insanely egregious, but it's egregious to some extent because everything is relative, right? So this week's when will the insanity stop is I lost my life savings. Those are never words you want to hear or actually have to say, right? I lost my life savings. I had BTC, Bitcoin, worth $12,000, my entire savings, and I got greedy as BTC rose. I tried using leverage, oh boy, leverage to maximize gains. At first, I lost a bit, but then I took bigger risks to try to recover my money. I want you guys to read that because I think a lot of folks have done this. At first, I lost a bit, but then I took bigger risks to recover my money. Averaging down on a losing position is what that is, and it's dangerous. After 3 weeks of sleepless nights, I lost all my savings. Now I have nothing left. I thought I was a rational person accumulating Bitcoin over the years. Now I wonder how greed drove me to ignore all my principles, losing everything in such a short time with 50x leverage. 50x leverage. Wow. I feel like I can't trust myself anymore. I don't know how to cope with this. Guys, I saved this one specifically because I really think this hits home for a lot of people. And the reason it hits home is there's two big things in here that I think a lot of people feel. One, I took bigger risks to get my money back. That's averaging down on a losing position, hoping it's going to bounce. And two, I thought I was a rational person. Those are two things that I think for a lot of people, a lot of traders, like it hits to your core being because you've probably averaged down on a losing position before. And most of you, just like you think you're good drivers, most of you think you're rational people. But like I always tell you, don't tell me what you think, show me what you do. I don't care what you think you are, show me who you are. And that's exactly what happened with this person. They're clearly not a rational person because they did this. And all of us have a little bit of this in us. Why am I saying all this? Because all of us on some level are susceptible to these types of mistakes. So you have to really keep it tight. And this is where that accountability partner consequence system will help keep you on the straight and narrow. And this is why trading is such a challenging business, because there's no one over your shoulder going, hey, don't do that, Ali. Don't do that, Sophia. There's no boss that's going to check and go, you know what, your performance report, you're lacking in this area, so we're going to, put a consequence on you. In trading, no one's looking over your shoulder, man. No one. That's you and only you. And we tend to take advantage of ourselves, unfortunately. And when we do that, we typically do bad things and we accelerate our pain. And we make our pain a lot worse. All right? So anyway, I saved this one, not because the 12 grand was a ton of money, but mainly because those two things. The person was taking bigger risks to recover, and they thought they were a rational person. So let's move along from this and get into this stuff. Okay? All right. TPS. The basic candlestick. Multiple candlesticks form pivots. And these pivots form areas of support and resistance. It's from these support and resistance areas that we typically enter trades. We do this by looking for multiple concepts to converge in one area. For example, we might look for a specific price pattern, such as a buy setup with a bottoming tail, a green bar, increased volume, near a moving average at support. The more concepts converging in the area, the more likely that trade will work, right? As pattern traders, we are also odds traders, and the higher the odds, the more likely we profit from the market. So it is our job as traders to look for the highest odds patterns we can find. This is how we effectively use our chart tools, specifically price, volume, and moving averages. Now, that's basically trading in a nutshell, right? Trading in a nutshell. But now let's get a little bit more granular from it. So this next chart, immediately at first, you're going to think it's something different than it is immediately. And then you'll realize, oh, it is slightly different. And here it is. So immediately you're thinking, oh, is this the basic candlestick? What's a red bar? What's a green bar? It's not. That's not what we're really looking at here. Okay? Basically what we're looking at, support and resistance, and the differences between candlesticks. Okay? And we're going to get, again, a bit more granular. It's mostly chart slides. In fact, I think there's only one more text slide in the whole presentation. But if we look to the left and we look to the right, while we have red and green and red, are we really looking at the same thing? Okay? And the question is, if not, what is the difference? Right? What's the difference? Are they the same? Well, no, they're not the same. They look a little different. And Sophie is getting right to the point. One is battle tested, another isn't. But it still has to go in context, right? Because while you look at this green bar right here, this one right here, okay, and you're like, well, there's a little topping tail here, there's a little bottoming tail here. So at one point, this was actually green, and then it kind of turned into red, and then this was what? Red, and it turned into green, right? I mean, when you think about it, it kind of looks like this. If I could do this, if you guys can just bear with me, right? Just bear with me. At one point, it looked like this, right? Okay. And then it changed to this, right? I mean, that's basically what we're talking about here. That topping tail at one point actually was a solid green bar. That topping tail was just green up, and then when the sellers came in, that's when the topping tail started to form. All right? So when you think about this, now if we want to look at the whole bar, okay, it realistically was like that at one point, right? Because it actually went red for a period of time, because I know it opened down here. I know it opened here. It went red, and then came back up. So then it kind of looks like this. So realistically, this is kind of exactly how you have to look at this bar. This little bar with a topping tail here and this topping and a bottoming tail here actually looks like this. Okay, let me move this away just so you can see it here. Okay? That's really what that looks like. Okay? At one point, it looked like this. Okay, it looked like this. But then we get rid of that, and it turned into this. That's basically what you're seeing here. Well, that's how I want you to look at every bar. I want you to look at every bar, and I want you to look at the tail as red or green. I want you to look at the tail as red or green, because that's really what you're looking at. Okay? And then that should hopefully give you a better representation, visual representation of what's actually going on inside the bar. Okay? And the same thing over here, but opposite. Now, you guys can do that on yourself. That, call it homework, right? That when you look at this, this is the opposite of what we just looked at. Okay? The bottom section isn't red, right? If I go back, right, the bottom section is green. It left the bottoming tail, Rob. It started red, but ultimately when the bar closed, that's what it looked like. When the bar closed, this is what it looked like. Because this is green, right? Look, it starts off red, but it finishes with a bottoming tail, which means it's green. Does that make sense, Rob? I want to be clear we're on the same page. It starts off doing this, red, 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 and then it goes like this, green, 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 till the red's gone. Make sense? So yes, it actually looks like this. This is how the final product looks. When this thing closes right here, because it closed right there, that's really what you're actually looking at. Okay? I just want that to be clear. This is actually what you're looking at. Okay? We talked about it when it was forming, red at the bottom, green at the top, but then when it closed, it's red at the top, green on the bottom. All right, so anyway, let's kind of move on from that. So the point I'm making is, this is battle tested, but do we know that this isn't battle tested? Right here, this wide range green bar. Can we say for sure that that's not battle tested? Give me a yes or no. Do we know for sure that this is not battle tested? Yes or no? Yes, we know it is, or no, we don't know if it is. Come on, step up. Don't be scared. We don't know. We don't know if it's battle tested. We have no idea. Because I don't know, I can't see inside the bar yet. Right? Just judging from this, I don't know yet. Right? But let's draw it. This right here, that's the bar we're looking at. Okay? But what if? What if it did this? So what if, okay, hypothetical, what if this bar here is a 15-minute bar, right? What if this bar is a 15-minute bar and this is a 5-minute, 5-minute, 5-minute? It could absolutely look like this, right? It started at the bottom, went all the way up to the top. Then it left the world's biggest topping tail you've ever seen in your entire life. And then that topping tail got completely engulfed by a green bar. Now it's a wide range green bar. Literally, it's possible that this could be this. Right? It's absolutely possible that that could be this. If this is a 15-minute and there's a 5 minutes. It could also be possible, right? It could also be possible that that green bar looks like this. Right? We could be on a 15-minute chart right here. And this could be 5 minutes, 5 minutes, 5 minutes. And then it's not battle tested. It just went straight up. So I don't know how this bar formed because I haven't drilled down to a lower time frame to see how it formed. But it's very important to me to know how it formed because it's going to give me a better understanding of whether or not it's as strong as I think. Now remember, we're only talking about the bar. We have not yet talked about the location of the bar, right? We haven't. Because this could be a wide range igniting bar right here. This could also be a wide range ending bar. We haven't talked about location yet. All right. But knowing how a bar forms is very important. And the goal and the job for you guys is to get to a point where you can see a tail and visualize how it formed or what it probably looks like in a lower time frame. And then you'll simply look at the lower time frame to confirm, right? To confirm if you're right or not. Okay, so now we'll move on to this. All right. Support, support. They're basically the same area. One's a little bit lower than the other, whatever. Okay, they're supposed to be identical, but whatever. Okay. In fact, let's just move it up a little bit just so they're identical because they're supposed to be. All right, there we go. Okay. Which one has more support? Which one has more support? You guys didn't learn anything. You didn't learn anything from the last slide. The answer is we don't know. Why don't we know? Why don't we know? I know what you're thinking, and we're going to talk about it. Don't worry. I'm not going to ignore what you all said. Why don't we know? Because I don't know inside the bars. Right? So theoretically, the one on the right should have more support because there's a bottoming tail. Right? Theoretically, that's true because there's a bottoming tail. But this bar right here, okay, right there. How do you know if I took this bar out down here, okay? How do you know it doesn't look like this? Right? How do you know? How do you know that this bar, let's draw a line so you guys can all see it. How do you know it doesn't equal that? You don't. The answer is you don't. So while I understand why you all said the right one, I get it. Totally get it. And in theory, you're correct, but you don't know inside this bar or the previous bar yet. This could even be a bigger pivot for all we know on a lower time frame. Might actually end up looking similar to this because the bar before it might be forming in the same way. So while I agree with you on the surface, the one on the right is like, yeah, I know that this was red and it became green. So I can see it was battle tested. So that's why everyone said the one on the right, because with what we have in front of us, you can see that was battle tested. But what you can't see is inside any of these bars. So the answer is I don't really know. I don't really know, which is why we want to drill down and find out what's going on, right? A bottoming tail in one time frame is a pivot in another, usually, okay? It could be a major pivot. It could be a minor pivot. But if you take a look at this, right? Take a look at this 15-minute chart here on the left. And we go all the way over. And this is the 5-minute chart on the right. Time frames are arbitrary. Guys, they're just completely arbitrary. Okay? Time is not a form of support. Price action is. Okay? So when you look at this, you're like, that little tiny bottoming tail was this red bar. There was a little tiny small battle that was fought here, and the buyer stepped up and they won. So just because the clock ticks from 4 minutes to 5 minutes and a new bar forms does not automatically make it a new area of support. Just because it goes from 4 to 5 minutes and the bar ends. I mean, I think you guys would agree with me if I said, guys, you can find patterns on 3-minute charts, 7-minute charts, 12-minute charts, 67-minute charts. I don't care what time frames you use. We just happen to use the 1 minute, 2 minute, 5 minute, 15. You can use the 3 minute, the 5 minute. I don't care if you use a 7-minute chart. Whatever. Pattern's a pattern. But it's more than that. I want you to dig down inside the bar and tell me what's actually happening inside the bar. Because that's far more important than some arbitrary time change. I want to know what happened so that I can glean or get a better understanding if the strength is what I thought it was or the weakness is what I thought it was. And the only way I'm going to know that is to see if there's a battle that was fought, a topping tail, a bottoming tail, a pivot was in there, a red bar, a green bar, a volume spike. That's the only way I'm going to figure that out. Okay? And then we'll take this one step further. Now, 15.52. All of a sudden, what are we getting? A little bottoming tail on the 15-minute is a red bar on the 5 minutes is an actual straight up buy setup on a 2-minute. It's crazy. It's all the same thing, just on a different time frame. Nothing has changed here. You're just literally looking at different time frames. Okay? So, bottoming tail in one, minor pivot in another, full-fledged pivot in another. Actual pattern here. This is why you need to check multiple time frames. One, to help you get better entries, but two, to make sure you're not buying something that's super duper duper extended. For example, we are right here on the third bar up. What if this exact same situation happened up here? Now you have to start to question things, no? Think about what I'm saying. What if this same bottoming tail that's right here, what if it happened way up here? And now you have the same exact 2-minute chart, but way up here on the 15-minute chart. That presents a bit of a problem. You're up 5 bars on the 15, and you're looking at a 2-minute buy setup. The odds are against you, or I should say they're lower. They're not as good as if you're getting in a 2-minute buy setup in the beginning of the 15-minute move, right? So this is another reason, diffing deeper. That's a good one. Let's try that again. There we go. Diffing. That's a new one. Did I do it there? No, I got it right there. Anyway, so where I'm going with this is, you better look at multiple time frames. Okay? For multiple reasons. One, keep you out of trouble. Two, help you get into a trade you otherwise might not have found an entry on. This 15-minute has no entry. The 5-minute doesn't really have an entry, but the 2-minute does. And now all of a sudden you're on board a 15-minute power trend with a nice 2-minute entry. Not bad. Bias was on the 15, entry was on the 2, way to go. Key point, a battle occurred, which means this area has been tested, confirming who is in control, in this case, the bulls. Every chart you look at should be looked at like this. And if you're not looking at multiple time frames, you're not going to be a trader for very long. Okay, so now, change it up slightly. Not all pivots are the same. We want clean, clear, controlled pullbacks, right? Nice 45-degree angles, lower highs, lower lows, no more than 50% overlap. All these are right out of the book, okay? So when you see something like this on the left, you have a nice move up, a nice pullback, nice move up. When you look at this on the right, this is just, man, sloppy, right? There's a battle being fought on every single bar. This is difficult. Because every bar you have a completely different opinion, right? One bar you're like, oh, the buyers are overcoming the sellers. This is awesome. Next bar, oh, the sellers completely engulfed the buyers. I think it's weaker than I thought. Oh, the buyers completely overcame the sellers, and the buyers are strong. Oh, the sellers, and all of a sudden, like it's like she loves me not. You don't want to deal with this because on the way back up, you have to contend with all this crap over again. Right? Buyers and sellers fighting it out. On the way back up, you're probably going to have the same problem. So this is something that you don't want to have to handle or deal with. This level of congestion, this infighting, so to speak, is not something you really want to deal with. So smoother pivots, smoother moves are what you want to see. Okay, you don't want to see a lot of overlapping slop. All right? too much of it, of something can be bad, right? And in this case, there's too much battle testing going on here. And we're not really sure who the clear winner is, because everything that gets bought gets sold, and everything that gets sold gets bought. Now, you guys have seen this slide before. I haven't shown it in a while, but you've seen it. Multiple candlesticks form pivots, right? So the stock has tested this area on multiple occasions, and each time it failed. This tells us that there are sellers in this area, okay? The opposite is true down here. This stock has tested this area on multiple occasions, and each time it bounced. This tells us there are buyers in this area. So we have a bit of a tug of war between 79 and 95 bucks, okay? Buyers at the bottom, sellers at the top. This is a daily chart. Does this mean there's nothing that can be done with this? No, this is actually opportunity personified. Okay? You have a stock that's down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars in a row. Okay? And you would have thought right here, this bottoming tail right there would have bounced, but it didn't. Right? A red bar completely engulfed that bottoming tail. Huge weakness there. Continues lower. Doji bar, green bar, and starts to move back up. Now, would I buy this here? Probably not, because it's a tough one. It's challenging because at first glance you're like, well, maybe it's climactic, right? I mean, it dropped from 105 down to 80 or 79, whatever it is. That's a pretty damn big drop, 25%. It is far from the moving average. So you could make an argument that there is a small climactic right here, and you get in at maybe $81 or $82 with a stop at 79, and your first target's here at like 92. That's actually a 2 to 3 to 1. So you could make that argument, all right? But even if you choose not to take that, you do have to respect the fact that it dropped $25, and that's a monster drop. Why is that important to us? I know I'm not giving you a lot of details, but why is it important to understand that this is either climactic or almost mostly climactic? Why is that important? Talk to me. Why is it important to know that this move is either climactic or mostly almost climactic? Only 2 people? Jordan, 3 people? I can keep waiting, or we could just move on. Because what Eric is saying is the most likely thought process. The low is likely set. Not definitely set, likely set. Because it's down 10, 11 bars. It's down 20-some%. It's got a big volume spike at the bottom. So what does this mean? Even if I choose not to take it, it means that the next pullback likely won't put in a new low. And depending on the level depth of retracement, depending on how large the bounce is, it makes me even more confident it won't put in a new low. So let me explain. Remember, you got to read these bar by bar and in context. So we have nearly a climactic move here. Okay? Maybe it is climactic. It's close. Then, the more it bounces, the less likely it's going to put in a new low. The more it bounces, the less likely it's going to put in a new low. One more time. The more it bounces, the deeper the penetration, level and depth of penetration, the more likely it does not put in a new low. And this thing bounced above the moving average and went like $15. So the fact that it penetrated that deeply means it's probably not going to put in a new low. And it didn't. But we also have to respect the fact that there are sellers up here at 95 bucks. Saw it here. They came in again over here. I got to keep that in mind too. So when it pulls back to here, this area, you have an opportunity maybe to buy it, or you might just say it's too sloppy. For me, I would look at it and go, it's too sloppy. But it didn't put in a new low. It's too sloppy, but it didn't put in a new low. Okay? Bounce back. What didn't somebody say if it breaks 230, the shit could hit the fan today on Tesla? Just saying. Anyway, bounce back up, pulls back, bounce back, and what happens? It gets snuffed again at 95 bucks. Okay? Then it drops 1, 2, 3, 4, 5 bars. 6 bar comes down. Buyer stepped up here, buyer stepped up here. What's going to happen? Smooth pullback here. Note, you did not have a smooth pullback right here. But now you have one over here. So let's move to the next slide. Okay, same slide. Okay. So now I couldn't find a good entry in the middle here. I didn't really like, okay, a good entry. There wasn't anything here. But now I look over here. Let's make these like pink so you can see them. All right? Easier to see. Okay. So now I'm looking at this and I'm going, wait a second. It bounced once. It bounced twice. Now it's the third test. 7 bars down. Several bars are large bars, wide range bars, into multiple pivot support, increased volume down here at the bottom, green bar at the bottom, bottoming tail. Everything on that list is a sign of a reversal or a bounce. Bounce, 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 bounce. Now, because it's 100% retracement, we are not expecting a move back to 95. We're expecting a 50% move, which is the moving average, roughly, right? And that's like $87. You get in at 80, your stop's 79, your first target's like 87 bucks. My goodness. Even if it's a $2 stop loss, you still have 3 to 1. And it's a smooth pullback. Everything on this points to a bounce. This looks like a stock that's ready to transition. So, if you get your full target there, great. If you want to hold a half or a quarter or a third for a higher target, you can do that. But this is how you break down a chart. This is how you break down pivots. All right? This should look very familiar to you. Okay? Very familiar to you because it's in PTS. It's a direct slide from PTS. I clipped it. 15-minute chart. What do we have? A nice little buy setup, right? Nice little buy setup right there. Okay? Just showing you what it looks like. Looks pretty good, right? Pulls back to support. Note, it's pulling back to the opening price, not the opening price, but the low of the day price right there. It's pulling back to the green line, which is where buyers stepped up the last couple days. Now remember, the ceiling becomes the floor. This used to be the ceiling. Yesterday, the day before, the green line was the ceiling. But now we're above the ceiling. It's now the floor. Okay, now it's now the floor. So it ripped off the open, pulled back and retested. You have an entry right here. You have a stop loss down there. Nice. Now, normally, I just put the 2-minute chart up. And then I walk you guys through it and lead you down the primrose path. And basically say, hey, look at this beautiful sell setup. Right? Look at the beautiful sell setup. And you can't deny that it's a sell setup. In fact, let's do this for a second. Let's just, for shits and giggles, let's just do this. Okay. Let's just do that. Okay, now. Buy the textbook definition per the textbook. Hence, that means buy the textbook. Yes or no? Just give me a Y or an N. Is it a sell setup on the 2-minute time frame? I'm only asking about the 2-minute time frame. Give me a yes or a no. Is it a sell setup per the textbook? The answer is a resounding yes. It is. You have a double top retest. You now have a lower low and a lower high, and a lower low and a lower high. We need 2 or more lower lows or lower highs. 2 or more. Well, we have that. We have a lower low number 1, lower low number 2, lower high number 1, lower high number 2. We are below the moving average. You're right on that downtrend line. You double topped. I mean, on this micro time frame, it is a sell setup. And this is why we don't trade in vacuums. Because if you look at this, you're like, well, let's go down the checklist. Topping tail, check. Doji bar, narrow body bar, check. At or near the declining moving average, check. At minor price resistance, check. At 50% retracement, check. Even a downtrend line, check. I mean, I have 6 check boxes on this thing already. Risk to reward, okay, check. We're just checking the boxes. Check, 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 check. But it's a 2-minute chart, and we haven't looked at anything else. So on this time frame, you can't really argue against the fact that it's a sell setup. Until you open up your eyes to a higher time frame, and you're like, you know what? Maybe it's a good idea to take a look at the higher time frame. Because what's happening here is this sell setup is happening inside of a 15-minute buy setup. And that 15-minute chart happens to be down 1, 2, 3. This is the 4th bar down. So the 2-minute failed sell setup confirmed a 15-minute buy setup. So the second this thing fails right here, see where my cursor is, right there, right there. The second this thing fails, it's actually triggering this buy setup. The stock comes all the way back up. Because you were too lazy to look at the 15-minute chart. Now, here's the irony. The irony is, if you just looked, and this is the whole point of the slide, right? Is if you just looked at this, you go, duh, that's a really nice 15-minute chart, right? And then over here, if you just looked at this, you go, duh, that's a really nice sell setup. If you didn't know the future, you go, yeah, that's a really nice sell setup. So when you look at each one by itself, they both look really good, but only one of them actually is good, right? Only one of them actually is good. So when you look at that, you better make sure you're not going against the higher time frame. Because if you are, there's a really good chance you're going to lose. And this was nearly a perfect buy setup. But tempting to short it on the 2, isn't it? Okay. Remember Tilray? I haven't traded this in a long time. Start with the daily. Red bar, red bar, red bar, 3. Bottoming tail, red bar. And then the stock gaps up. Right? It's a buy setup near some support. And the stock kind of gaps up. All right, yeah, blast from the past is right, okay? So the stock gaps up, pulls back, bounces, retests, buy here. What is so good about this? Talk me through it. Give me some reasons why this is so good. Oh. I know it did for a little bit, Jordan. It's pretty crazy. Why is this pattern so good? What is the one thing that really sells you on this? There's a couple things that are really good, but there's one thing that really just goes, yeah, I have to take it now. Right? There's one big thing here that you're like, yep, I have to take it. So it already has a daily buy setup. That's good, right? It pulled back and bounced. That's good, right? But this bottoming tail is like what used to be AJ's orange juice. Super juicy, right? Now it's just bitter, right? This bottoming tail is incredible because you already have a bottoming tail right here and it bounces up and you're thinking, okay, this stock should go higher. But then what happens? It goes full wide range red, right? Full wide range red. And then it turns green. So I'll go all the way back up. I know it's annoying. Just give me 1 second. Nope, that's not it. That's not it. Maybe that's it. There we go. Okay. Let's go all the way back down. Okay? So when you look at this, basically, that's what you're really looking at. Right? That's how you have to look at that. That green right there. Tested, buyer stepped up. Tested again, buyer stepped up. Then it gives you this flat top, 769. It says Tilray, 770 by 749. There it is. Bam. Now, did it ultimately later on fail? Yeah, but it didn't matter. You know, we got our 2-to-1 out of it. This is what, a 21-cent stop, and this thing went 31 cents or something like that, 41 cents. Okay? That is the trade. Don't get me wrong, that's not the only thing we're looking at, but that's that confirmation of strength. It retested it right there. You know what I mean? I know, wouldn't that be great, Jordan? Be awesome. But the point is, guys, is without that bottoming tail, this is not nearly as good. I want you to imagine for a second, okay? Here, bear with me. Guys, the reason I draw this stuff is I think people are highly visual, and I think they like seeing visual representations. Now, I'm not saying that this is bad, okay? But I'm simply saying this isn't as good. You see, I took out the bottoming tails. I took out all this crap. This is okay. But it's not nearly as good, not even close, as having the bottoming tail there. That bottoming tail says, hey, a big-time battle was fought here, and the buyer said, hold my beer. You sellers got nothing on us. And then this happened, and then it ripped. So where bars form matters. How bars form matters. Same concept. What do you see? Represents sellers coming in for a lower high fading a gap. Yeah, exactly. Yep. So, stock gaps down. Goes sideways. Peekaboo's lower. Peekaboo's. And then a big-ass green bar comes in. That's like a 50-cent, 40-cent bar. Gets completely engulfed. So there's two things here. Right? This is a picture of weakness because the buyers tried to step up and go higher, and it really, really did look like they were going to. And then the very next bar, the sellers did about an 80% retracement, engulfing this. Couple little doji bars. What? Couple buyers. You're right, lagging around, hanging around. Buyers stepped up, sellers took them out. Buyers stepped up, sellers took them out again. What are we getting? Each one of these topping tails is what? It's a COW. It's a cow. Each one of those topping tails is a cow. What's a cow? What's a cow? What's a COW? Thank you. Confirmation of weakness. Each one of those topping tails is a confirmation of weakness. One here, one here, one here, and one here. And the more of them you get, and this is key, and the lower they start to happen. See, this one's pretty deep, 1250. This one, 1240. This one down at like 1220, 1230. They just note the sellers are stepping up sooner and sooner and sooner. Right here, it took a while for the sellers to come in, didn't it? Then they stepped up a little earlier. Then they stepped up a little earlier. Then a little earlier, right? This is unbelievably nice because, again, not only are the sellers stepping up, they're stepping up sooner and sooner and sooner. And then, bam, goes lower, right? Oracle yesterday, kind of similar. Yeah, absolutely, you're right. Very, very similar on Oracle. In fact, we talked about Oracle yesterday. It was like $13 or something, but I can't remember exactly what the price was. But, guys, this is what you're looking for because each bar, there's a battle being fought inside every one of those bars. And the sellers are winning every one of the battles. The stock's going lower. Doesn't look like much, but hey, it's a 50-cent move on a $12 stock. Same here. All right, you guys have seen this one before. 2-minute chart, daily chart. Well, the daily's up 1, 2, 3, 4, 5, 6, 7 days in a row. It's pretty extended from 55 to $67. Okay? Well, finally, finally, you get a little bit of a gap down, right? Tiny little bit. But what happens? The stock rips. That rip is that little topping tail. What happened 2 days ago? Sellers. What happened to yesterday? Sellers. Well, you're starting to see on a lower time frame, perhaps a 60-minute double top, right? If you were to drill down to a 15 or a 60, you're probably seeing a double top. You're like, wow, it's going to test it again. And it tested as a mini climactic inside of a mini daily climactic. You have kind of two mini climactics. You have a pseudo climactic on the daily, and you have a pseudo climactic here. But note, you get the doji bar, the topping tail, far from the moving average, inside of a daily that's extended. So while you're reading the micro, the macro is also very important here, because the stock is really extended and getting tired. And then you get confirmation. Here's your first little bit. 1, you have multiple wide range bars. 2, you are accelerating away from the moving average by a lot. 3, you're getting topping tail number 1. 4, you're getting a huge volume spike. Topping tail number 2, doji bar. That's a battle. Topping tail number 3, another battle. And bam. Now remember, this was a green bar at one point, right? I got to do it again for you. Sorry, guys. Just can't help myself. Let's go all the way back down. This right here. Come on. There we go. That right there is a big green bar. Okay? And it couldn't stay that way, right? It basically turned into a big red bar. That big green bar turned into a big ass red bar. And then the next bar just took it lower, triggers 66.50 and just take it down. This could be your first target at 65.50, and then it went lower. Higher time frame bias is short. Our job is to find a lower time frame entry. Look, multiple concepts converging in an area, understanding what's inside of a bar, understanding a pivot. You're looking for discernible patterns, bottoming tails, topping tails, patterns happening at prior support and resistance areas, retracement levels, change of color bars, increased volume, stock showing good liquidity, stock within its average trading range, stock is not up 3 or more bars. Guys, what this really is like a pre-trade checklist. Yeah, that's right. Go ahead. Take your screenshots now, okay? Stock showing relative strength or weakness to the market, market timing. After getting all of those things, then you can look to see if there's an indicator confirming what you're already seeing. An indicator meaning a trend line or a moving average. Okay? But this is basically a pre-trade checklist. Is it a perfect one? No, but it's pretty damn good. And then I showed you a whole bunch of examples of what to trade for, what to look for. Okay? So I want you guys looking inside the bars. Not just vacuums, but looking at multiple time frames, looking at what a bottoming tail really is, looking at what a wide range bar really is. You see a wide range bar, but you don't really know what it looks like inside the bar. Take a look. Look where it's happening. Look how it formed. Right? See if there's volume as well. So look at all of those things. Okay? Oh, Jordan, come on, my man. And then JWoww speaks and does the opposite, and the market rips $4, and then your trade works. See, there's two sides to that. You know what I mean? And then, of course, check the liquidity, check the spread, right? There's a bunch of other things. But point is if you stick to this, trading becomes much easier. It really does. Like, you're so much more focused on what's important. You've thrown out the garbage. And once you get the mental game down, you're not even tempted to take the garbage. I mean, we've talked about it in here before. There's a lot of folks that take boredom trades. Well, boredom trades get you in trouble because what happens in a boredom trade is you start out with 100 shares and you end up with 500. And you're like, how did this happen? Oh, I got bored. I cost average down, thought I was going to get out of it. And you didn't. And you should have never taken the trade to begin with. Okay? Nice job, Stefan, on your Q's puts. So use this as some form, a basic pre-trade checklist. But you still have to use multiple time frames and look at them and discern what's going on out there. Okay? So I hope that you guys took the information or will take the information from this lecture to help become better traders, because I'm trying to impart this knowledge in you guys, one, because I won't be here forever, and two, to help keep you from overcomplicating the process in the business. It's really actually not that difficult. And you know it. How do I know you know it? Because when you see a perfect trade, you don't let me forget about it. You'll email me, Jared, check this trade out. I think it's awesome. Well, yeah, it is awesome. Why don't you take more of those? Well, I don't see them that much. So wait till you do. Yeah, but, I get kind of bored. And you see what I mean? Like, we talk ourselves into trades that we probably shouldn't be in. Most trades, not all, because we will make a couple mistakes, but 80% of the trades you take should be no-brainers. They should be ones you look at and go, yeah, okay. Yep. Hey, if the market wamboozles you, so what? If JWoww wamboozles you, so what? There's nothing you can do about that. But you can begin with quality. You don't know the future, but you can start with quality. But if you start with crap, you've already set yourself back, if that makes sense. So simplify your approach, okay? Be smart with your trading. Don't get caught up in boredom trades. Don't get caught up in I need to make my money back. Let the emotions trade for you, okay? Easy money trades. That's the ones you should be taking, Rob, even if you take a few less trades here or there. But every day there's at least a couple few. Almost every day. It's almost very rare you don't find easy money trades. The question is, did we wait for only those trades, or do we get caught up in the boredom or caught up in the FOMO or whatever you want to call it? All right? So I hope you guys took something from that lecture. I hope you'll become better traders because of it. I'm Jared Wesley of Live Traders. We'll get back at it again next week.